What's going on? In this video, I want to show you guys on how to diversify your portfolio. Now, if you're new to investing in the stock market, a lot of you guys heard about individual stocks. However, a millionaire friend of mine was like, hey, why are you chasing individual stocks? Why don't you chase them all? And I'm like, what do you mean? He was like, yo, do you know that you can invest in the top stocks in an index fund? What an index fund is an index fund is a portfolio of stocks designed to mimic the composite performance of the financial market index. Index funds have lower expenses rate and fees than actively managed funds, mutual funds. Mutual funds are actively managed. They're designed to beat the S&P 500 and the NASDAQ, the stock market. That's why I want you guys to diversify your portfolio, because I want something that's trying to beat the market. I want to also have a safe investment that's going with the market. That's a passive investment strategy like index funds is. Index funds seek to match the risk and return of the market. On that theory, it's a long-term investment. Understand, a lot of people want to get rich quick. Relax. I want to show you guys on how to diversify your portfolio. The reason why you don't want to put all your eggs in one basket just in case one of the markets crashes. What I want to say, when you are diversifying your portfolio in index funds, you got small cap, mid cap, and large cap. All right, so when you're looking for index funds, you want to pick 3 different index funds. This is what I do. I have read that some of them are saying have 2 large growth index funds, 2 mid cap, and 2 small cap. First, large cap. What is a large cap index fund? A large cap index fund is overall U.S. stock market size, growth, and prices. They invest in stocks that are 70%. In the top 70%, the Tesla, the Facebook, the Microsoft capitalization of the U.S. equity are defined as large cap. The blend style is assigned to portfolios where neither growth or value characteristics predominate. These portfolios tend to invest across the spectrum of U.S. industries. So that's a large cap. As the name says, mid-cap funds. Meanwhile, mid-cap funds is a type of equity fund that holds in its portfolio a mix of value and growth stocks where the market capitalization is generally between $2 billion and $10 billion. So that's a mid-cap. And in this video, I'm going to show you guys great large-cap index funds, great mid-cap, and great small-cap funds that you should invest in. Okay, so now small caps are... they invest in stocks that are normally between $3 million and $2 billion. They're index funds, special types, track a particular market, of course, just like index fund. What's the benefit of investing in small cap market? Small cap, these are the key takeaways. Individual small cap offer a higher growth potential. Of course, because they're smaller. One of those stocks may hit, boom. A lot of people who want to get rich quick, as I call it, or want to see a healthy return quickly, may say, hey, I'm going to take a risk. It's a higher risk versus reward. Scared money don't make no money. Individual small cap stocks offer higher growth potential. And small cap value index funds outperform the S&P 500 in the long run. Not in the short run, but in the long run. Small cap also experience high volatility, up and down. And individual small companies are more likely to go bankrupt than large firms. Of course, you know Tesla, Microsoft, Facebook ain't going nowhere. So, the higher risk, higher potential gains. Period. Mid and large. Same. And the benefit of a large cap is that they're not going nowhere. You got a pretty safe investment in a large cap fund. Before I go on, these are the 3 index funds that I'm invested in now. FSMAX, FXAIX, FNCMX. Those are 3 if you're looking for 3 great index funds, those are 3 great index funds here. So if you're looking for a great small cap index fund, this one here. This stock ticker is FSMAX. This is Fidelity Small Cap Index Fund. And if you guys could check the performance of this. 2017, 14%. 18 a minus 10. However, had you invested more in 2018, you're looking at 2019, 25% increase. Pretty good. This is a representation. Had you taken $10,000 and put it in 2017, you will have over $20,000. You would have doubled your money. You can't double your money in a bank. You leave your money in a bank, you will get literally 3 cents. 3 cents. Maybe. Alright, so let me check. It's trading at $29. The expense rate, the gross expense ratio is only 3%, which is really good. The net expense ratio is really good. This is the fees for people managing those stocks. That's very good. So the top 10 holdings are these companies here. These are the top 10 holdings. And they're not as known as the large blend, but these are the top 10 holdings for a small cap. So this is a large blend. This is a large cap. Check it out. This is Fidelity's 500 index fund. This is FXAIX. FXAIX is the stock ticker. FXAIX. This is Fidelity's 500 index fund. I want to check the performance. The gross expense ratio is only 2%. The net expense ratio is only 2%. That's really good. Really good. Alright, so now let's see the performance. Check this. Max return. In 2017, 21%. 2018, everything was negative, -4. But had you invested in that year, 2009, a 31%. Wow. 2020, 18%. So far in 2021, a 1.7. All right. If you want to check out the large blend, their top 10 holdings. Like I said, top 10 holdings usually do the top 10 websites. You got the Apple, you got the Microsoft, you got the Amazon, Facebook, Tesla, Google, Johnson & Johnson, JP Morgan. All right. Those are pretty safe bets. You know those ain't going nowhere. However, if you don't have the money, if you're not a multi-millionaire, well, very wealthy to buy Apple, Microsoft, Amazon, then this is the best, safe way to do it. All right, so now let's check a mid-cap index fund. Fidelity's FXMAX. I've been hearing a lot about this. I can even take you to Fidelity's website. All right, Fidelity's Extended Market Index Fund, and this is a mid-cap. FXMAX. FSMAX. All right, let's check out its performance before I go to the top 10. Its performance, 18%. Had you invested $10,000 in 2017, you'll be over $20,000. You've doubled your money. 28% in 2019, 32% in 2020. So far this year, they are already 8%. 8%. Check the numbers. This is TD Ameritrade. I use TD Ameritrade because some of those Robinhood apps and stuff like that, I don't want to do important work on a cell phone. I can't see myself doing something as investing money and using a cell phone. I gotta get on the computer and see and get more info. That's why I like TD Ameritrade. All right, so now top 10 holdings: Zoom, Uber, some of these. So these is a mid cap. So you should diversify by getting all three: a large, mid, and a small. Now, when I say diversify your portfolio, dividend stocks also. You want to have index funds, mutual funds. You also want to have dividend stocks. A lot of people want passive income every year. A lot of people are looking to invest, especially when you have a lot of money to invest. Granted, you paid off all your debts. All right, pay off all your debts first. Start investing. And so if you have extra money to invest, you want to see a passive income coming throughout your portfolio. These are consistent of the 10 or 12 best dividend stocks for your money out there. And I'm going to go through some of these for you. Of course, this is Apple paying good dividends. And companies that have the potential of growth in their dividends too. We got Apple, we got Microsoft, we got McDonald's. McDonald's have a good dividends and a return on your money. Lowe's, 3M, Coca-Cola, Procter & Gamble. This one, Caterpillar, JP Morgan Chase, AT&T, and real estate income. And this one. These are really, really great dividend stocks to invest in, to have in your portfolio. Also, REITs. REITs is real estate investment trust. They're saying that they have to give 90% of their income or their return to its shareholders. So experts are saying that it's just like having a rental property, minus the hard work and dedication, blood, sweat, and tears of having a tenant, stuff like that. They're saying you can see a good 18% return on your money with good REITs. Now, REITs also has, what I was happy to see, Vanguard Real Estate Index Fund for REITs. I was like, hey. All right. But so that's supposed to be a really good one. This Medical Properties Trust is supposed to be a really great REIT to invest in. Vanguard Estate, this is an ETF. REIT. This one, Realty Inc. This stock ticker, just O. It's just the stock ticker O. It's supposed to be a really good REIT. And this one, EQIX. VQ, MPW. These are supposed to be really great REITs. I looked up the best REITs, did the research, and this is what I came up with. Also, in your portfolio, once you're making a diverse portfolio, check out ETFs. I got marijuana stock on there. That's something I'm personally following. Vanguard. This one. These are all great index funds. Check these out. HDV. I did the research on best index funds to invest in. This is what I came in. You do your own research on top 10 ETFs to invest, top 10 mutual funds, index funds, REITs, and eventually bonds. So this is my personal watch list. So I gave you guys good index funds, good mutual funds, small, mid, and large cap, REITs, ETFs. Also, check out bonds. Bonds is like a later on in your portfolio after you have a foundation. Build a foundation in your index and mutual funds first. Build that foundation. Then move to ETFs and REITs. And once you move to those, then diversify your dividend stocks. Therefore, you can see passive income. All those other index funds, they pay dividends, but the individual dividend stocks, and you can invest in little of each. So what I do is I had it automatically taken out a certain amount of money for each of them, and just have a diverse portfolio all the way around. Therefore, I can see good dividends, I can see a good return, and in the good dividend stocks, they're great stocks, so they pretty much are safe investments. Anyway, I wanted to bring you guys on how to diversify your portfolio. I want you guys to make sure you hit that like button. That really helps me out. Make sure you guys share this video. This is a new channel I'm doing for stock investment. I want you guys to be rich and to invest your money wisely. I'm going to do a lot more videos on how I did videos on how to save money. Therefore, you can put more money into the stock market. Make sure you guys hit that like button. Hit that share button. Also, subscribe to this channel. Peace, peace. Peace.